CMHC has just released their most recent Canadian housing market assessment, and they're sending out some alarm bells right now. As a whole, the Canadian real estate market is marked as moderately vulnerable, while other cities are at a high degree of vulnerability. Is your city one of those? We're going to break down the entire CMHC Canadian housing market assessment on this episode of Bald Prairie Real Estate. Hey everyone, welcome back to another episode of Bald Prairie Real Estate, where I want to educate you all about Canadian real estate. If you're new here, my name is Matthew Pfeiffer. I'm a real estate agent from Regina, Saskatchewan, and I like keeping you up to date on the Canadian real estate market. I cover buyer's guides, seller's guides, and everything in between. If it has anything to do with Canadian real estate, I have it covered on this channel. This that we're talking about today, though, is the Canadian housing market assessment from CMHC, where they're looking at vulnerabilities and instabilities in the market. This, though, only covers until the end of 2020, even though it's just released. That's when their data collection ended, so it is a little bit out of date, but there's some great information we can take from this. If you want a more up-to-date outlook on the Canadian real estate market, right here is my Canadian real estate market update, which has the most up-to-date information on your city. So check that one out if you want a live picture of what's going on in your real estate market. Now, like I said, this is looking at instabilities and vulnerabilities in the market. This is not a prediction. I know in the news they talked about CMHC predicting this and that. That's not what this is. They say very clearly in the report, this is not a prediction. And maybe that is a good thing, because the last time they made a prediction, it didn't really go that well for them. But we're going to look at this data. We're going to start looking at the national picture, and I'm going to explain their methodology and what each category means. So don't skip my national section if you want a better explanation as to what each one of these categories mean. And then I'm going to expand out to look at all the different cities that I cover in my Canadian real estate market update. I'm also going to link below this report so you can download it and read it yourself. Before we get into it though, let's start off with another terrible joke. And this one is a viewer. This is Genesis306 that put this one in the comments. What do you call an overweight psychic? A fortune teller. Thank you for that awesome joke. If you have a terrible joke that I can use in a future episode, put it in the comments below. So this CMHC report has 4 categories and an overall assessment. Within each category, there's 3 degrees of vulnerability: low, medium, and high. So let's look at the first one here, which is overheating. They're saying that that is when demand outpaces supply. Right now, they've got this as went from low to moderate degree of vulnerability for overheating. Price acceleration, of course, when prices ramp up rapidly, this is still listed as low. Overvaluation is when prices are higher than the economic fundamentals suggest that they should be. Right now, this continues to be listed as moderate. Now, what I did a couple of weeks ago is a video breakdown of average household to average prices. And let's see if those houses are actually affordable to the average household. I've got that video right there. I think you're gonna find it really interesting. So check that one out. My findings and theirs don't always line up. Check that one out. Excess inventories is their last category. So this is unoccupied homes. This is a really good stat to look at, because they're looking at how many houses are being purposely left vacant, or if they're vacant because the rental market is showing signs of weakness there. And this used to be called overbuilding in their older reports. They've just changed the terminology a little bit, but the metrics are still the same, and they have this ranked as low. The overall assessments that takes all these factors, combines them together, they have this rate now looking at imbalances in the market. They're saying this continues to be a moderate degree of vulnerability nationally. Now, let's look at Victoria. In Victoria, the overheating is still ranked as low, but they are concerned about the single-family detached market continuing to trend into their overheating threshold. Price acceleration, they've got that listed as low. Overvaluation continues to be moderate, but they're saying the imbalances are actually lessening in Victoria. Excess inventory continues to be low, and the overall assessment continues to be moderate. In Vancouver, they have the overheating ranked as low, although they did say that the detached and attached markets are both trending towards seller category as demand outstrips supply. Price acceleration, they also have ranked as low, but they did say that the rate at which things are starting to ramp up is very similar to what they saw in 2017, which would trigger above their threshold from low to moderate. Overvaluation continues to be low, even while price growth has of course been quite strong in Vancouver. They're saying the economic fundamentals that they track support this price growth. Excess inventory was elevated to moderate, and that is because of the weakness in the rental market, specifically in those downtown condos, and their overall assessment in Vancouver continues to be moderate. In the Calgary real estate market, overheating continues to be ranked as low. The sales to new listing ratio, though, has been trending towards a seller's market, and it's actually the best it has been since 2015. Price acceleration continues to be low. Overvaluation continues to be low. Excess inventory, though, has been elevated to high, and that is because they are seeing weakness in the Calgary rental market. Their overall assessment has been increased from low to moderate, and that's because of that weakness that they're seeing in the rental market. In Edmonton, overheating was rated as low. Price acceleration was also rated as low. Overvaluation was elevated to moderate. They said while overall the economic fundamentals in Edmonton continue to support prices, they are seeing pockets and market segments where the fundamentals don't support current pricing. Their excess inventory continues to be moderate, but it was trending back to the low threshold they have, and their overall assessment was moderate, and that was mainly due to this overvaluation, and it's being elevated to moderate. That has CMHC elevating their overall rating from low to moderate in Edmonton. In the Saskatoon real estate market, overheating continues to be low. Price acceleration is low. Overvaluation continues to be low, but the gap is starting to shrink according to the fundamentals that they track. Excess inventory continues to be low, especially as inventory levels are actually trending down in Saskatoon. Their overall assessment continues to be low. Saskatoon has actually been consistently ranked one of the least vulnerable markets in Canada for a number of months now by CMHC. In Regina, the best city in Canada, my hometown, overheating remains low. Price acceleration also remains low. Overvaluation is low. Excess inventory, though, continues to be moderate, and that's because the vacancy rate in Regina is about 7.5%. Their threshold is 6.2%. The overall assessment, which was moderate last time we did this report, they have adjusted that to low, and it continues to remain at low in Regina. In Winnipeg, they are seeing overheating starting up, but it still hasn't crossed their threshold, so they've still got that at low. Price acceleration is low. Overvaluation is still low, but again, the fundamentals that they track is starting to narrow that gap, trending towards their moderate threshold. Excess inventory continues to be low. It does trend down in Winnipeg as well, and their overall assessment is low. Much like Saskatoon, Winnipeg has been ranked with a low degree of vulnerability for a number of reports in a row. In the Toronto real estate market, they're saying that overheating continues to remain low, and price acceleration has been changed from low to moderate. This is, of course, due to that big surge in demand in the detached single-family home market. Overvaluation, they still have it ranked as low because, according to CMHC, the economic fundamentals are supporting house prices. Now, when I did my average house price to average household income comparison in Toronto, I came to a little bit different conclusions. You can check out that video. I've got it linked in the description below. I think you're gonna find that very interesting. Excess inventory has been elevated from low to moderate. This, of course, is driven by the weakness in the rental market that is existing in Toronto and that surge of inventory that came on in 2020. That was partially due to, of course, a huge change in economic fundamentals, as well as Toronto City Council's decision to severely restrict the short-term rental market. So a lot of people put those up for sale. Overall assessment, though, that has been elevated from moderate to a high degree of vulnerability. They're saying this is driven by excess inventory levels and that surge in pricing in that detached single-family market. CMHC has the alarm bells ringing for Ottawa right now. They're saying overheating remains at moderate, but supply continues to lag dramatically behind demand. Price acceleration remains at moderate. prices in Ottawa have been increasing at like double-digit rates recently. It is crazy what's going on in Ottawa. Overvaluation has been elevated from low to moderate. They're saying income increases haven't kept up with price increases. Excess inventory has been elevated from low to moderate, much like Toronto. That downtown apartment rental market continues to show weakness. And their overall assessment, though, has been raised from moderate to a high degree of vulnerability in the Ottawa real estate market. In the Montreal real estate market, overheating remains at low. Price acceleration remains at moderate, although it is reaching the upper bounds of their threshold from moderate to high degrees of vulnerability. Overvaluation remains at low. That is closing in on their threshold for moderate degree of vulnerability. Excess inventory remains at low, and their overall assessment is at moderate, but because those two factors continue to creep up to the upper ends of their thresholds, you could see Montreal tip from moderate to a high degree of vulnerability according to CMHC in the future. The Halifax real estate market is one that I've talked at length about in my Canadian real estate market updates as quietly one of the hottest markets in Canada, and CMHC talks a lot about that in their report. They've got overheating elevated to moderate. Price acceleration was also elevated to moderate. Overvaluation continues to be at moderate. Their excess inventory is at low, and their overall assessment was elevated from moderate to high. This is due to that overheating, price acceleration, and overvaluation metrics all crossing over into their next degree of vulnerability metric. So the Halifax real estate market is one that CMHC is recognizing with high degree of vulnerability. As CMHC always does, they do a fantastic job of data collection, and the reports are really good to read. They are a little bit late to the market a lot of times on these reports. This one obviously is 3 months behind. We're well into the spring market right now. We're already in high gear. We're seeing sales increase and prices shooting through the roof. How long will this last? Well, you have to think at some point this is going to slow down. Although I am thinking we are going to see the cities, those urban markets, downtown and condo type markets, that's going to dominate the Canadian real estate market in the back half of this year. As people start to feel more comfortable being in more condensed urban environments, they're going to remember what they loved about being downtown and in those large centers. And that's why I think especially the condo market is going to be very strong in the back half of 2021. We're already starting to see it. Condo prices are starting to creep back up, and rental rates are also increasing. So I think you're going to see that surge that has gone out to these suburbs start to come back in, and you're going to see the cities dominate the Canadian real estate market in the back half of this year. But are you thinking about buying a house this year and you would like to be connected with a fantastic real estate agent in your market? My contact information is below. I would be happy to connect you with an agent in your market. They can help you with exactly what you are looking for. So send me an email there and I will get you connected. My Canadian real estate market with the most up-to-date information right here. You can check that one out. And this is what the YouTube algorithm says you need to watch next on Bald Prairie Real Estate. So check that one out. If you like this video, hit the like button. If you loved it, hit the subscribe button for me. As always, guys, thanks very much for watching.